All right, welcome back, guys. So last week we got to take a look at chapter 5 review, and then we got to also take a look at chapter 6. Right, chapter 6 was a short one. In this case, I'm not going to include the lower cost of market. However, I will be including knowing how to do a sales return, and allowances, and etc. etc. Okay. So with this, it's a combination of both, and here your instructions are that your inventory method is periodic and it is LIFO. Okay, assume that sales tax is 8.25%. So let's go ahead and take a look at our scenario. So May 1st, okay, we end up purchasing 500 brown mugs at $2.65 each. Freight was $100 on an account from Cuppy's Co. Okay, terms are 5%, 15, net 30. Okay, so how are we going to journalize this? So please use the chart of accounts right here to be able to figure out how you should journalize this transaction. Okay. So we bought cups on an account. And instruction says that this is periodic inventory. Right? So how are we going to recognize or journalize this transaction?
Accounts payable and sales tax.
Okay, so did we sell items?
Oh no, no, we bought them.
We bought them. Okay.
Purchase expense. No.
Good. Purchase expense because it's periodic inventory, right?
Mm-hmm.
So we got,
But we buy mugs, so it is a sub-account mug, or we don't use like.
okay. So when we talk about periodic inventory, right?
Mm-hmm.
What do we first recognize that inventory as?
What do you mean? I don't understand the question.
So in chapter 5, right, when we talked about periodic inventory and we purchase inventory, right? How do you recognize that
Expense.
inventory? You
It's an
recognize it
expense.
exactly. You recognize it as an expense first, and then at the end of the given period is when you convert it.
Okay. You
Yes.
convert. So purchase expense
Okay.
and freight expense.
So it's May 1st. Okay, we got purchase expense. We got freight expense. What else?
The tax expense, no?
Is there tax? Was there tax?
Or assume the sales tax is 8.25. I don't know if we have. Oh,
Okay, now did we sell a product or did we buy a product?
We bought it on account.
We bought it on an account. So the assumption here is that you are tax exempt.
tax exempt. Okay.
So what else do you need to? You bought it on an account.
Account payable.
Accounts payable. Good. So here, let's see. We have purchase expense for 551, and then we have freight expense for 511, and then we have accounts payable for 201. Okay. All right. So how do we figure out our numbers here? Okay, if the scenario says that we purchased 500 brown mugs at $2.65 each, and freight was $100.
$1,325. Like on
Good. Freight was $100. So therefore, on an account, how much did we, how much was the total?
1,425.
1,425. Good. Okay. So here we're going to make a note saying that, so usually this is what's going to happen. Generally, when you do your description, you should include the person that you bought from. Cuppies Co. We purchased 500 mugs at $2.65 each. Okay? And we were also given terms. What was my terms?
5%, 15 at 30.
5%, 15, net 30. Okay? That will be my description there. Okay. Okay, good. So now we need to plug that into our inventory worksheet. So 5-1, quantity 500 at $2.65 with a freight of 100. So, right, how do we solve for my purchase expense? What's my purchase price?
$1,325.
Okay, plus 100 gives me a total of
14.25.
14.25. Now in this case, what tracking method am I using? Or what costing method am I using?
LIFO.
LIFO. So therefore, I need to calculate my cost per item. So in this case, what is going to be my cost per item here?
$2.85.
$2.85. Okay, good. So then on May 5th, what has happened here?
We returned 15 mugs for a full refund.
Okay, so we returned 15 broken mugs for a full refund. Okay, so let's check my chart of accounts out. What accounts will I be using?
Sales returns and allowances.
Okay, so did I sell a product? Or did I purchase a product?
No, sorry, we purchased it.
Okay, good.
For the purchase returns and allowances.
Purchase returns and allowances, which is going to be account 556. Okay. Now, in this case, right? What I'm supposed to be getting my money back. How did I pay?
You didn't pay.
You didn't pay. So how am I
Oh,
supposed to get my full refund?
account payable.
We're going to reduce the amount that we owe.
Mm-hmm.
Okay? By how much?
$42.75.
I did not get that. Let's plug it into our inventory worksheet first, and then we'll transfer the information there. So in this case, how many mugs did I return?
15.
We returned 15. Okay. Now, at what cost did I originally purchase my inventory for?
265.
265. Okay. So then, what is my total returns here?
It's 39.
39.75. Okay, good. And I'm going to make a note here. Returned 15 broken mugs at $2.65 each for full refund. Good. So then what happened? What else happened on the 5th of May?
You sold 10. 10.
Good. We sold 10 coffee mugs for how much each?
$9.99.
Okay. And what did we receive?
Cash.
Okay. So let's take a look at my accounts.
After we do account 102 for cash.
Count 102 for cash. Good. What else?
Sales.
Sales. Good. Sales, which is 401. What else?
Accounts receivable.
Did Okay, account receivable is when a customer owes you money. In this case, I made cash sales because I specified that I received cash for these sales of the 10 mugs. Right? What other assumption do we have to charge when we make a sale?
The taxes.
You have to charge sales tax. Okay? Which is account number 230. Okay? So in this case, how many items did I sell? You sold 10 mugs at what price?
$9.99 each.
Okay, so my total sales is going to be Good. 99.90. How much tax am I going to charge?
8.25%. $8.24.
$8.24. So then in grand total, how much cash am I going to be receiving?
108.14.
108.14. Good. And then here you could say in-store sales, or you could say we sold 10 mugs okay. Good. Now I have a question for you. Okay. Do we need to go to the inventory worksheet?
Nope.
No, because there is no section for the cost of goods sold, or there is no section for just updating inventory anyways. So in this case, we don't need to do anything to the inventory worksheet because the inventory worksheet is strictly only dealing with purchases. Okay.
It's gonna let you know at the end now is the 700 unit that you have on hand. So the rest it doesn't matter no when you sell just for the journal.
Correct, right? Because at the end of the day, we're gonna count how much we sold, right? Right. So then here we have on, let's see. Then we have here on May 6th that you end up selling 20 more mugs, okay? But this time you sold these 20 mugs to customer A on an account, and you gave this customer A terms, okay? So how am I going to journalize this transaction here?
Account receivable.
Good. Accounts receivable, right? Chart of accounts. We have an account receivable, number 103.
103.
Okay, account 103. Okay. What else do we need to recognize?
The sets.
Yes, because we sold stuff to a customer.
Mm-hmm.
Okay, and of course,
Sales tax. Very cool.
okay, so again, 401 and 230. So, in this case, right, I sold 20 mugs at $9.99 each. Right? On May 6th, we sold 20 mugs at $9.99 each on an account to customer A. And we gave them terms of 10%, 10, net 30. Okay? So in this case, how much was the sales?
$199.8. I think so.
199.8, good. How much tax are you going to be charging?
16.48.
Oops. $1,648. So therefore, how much does customer A owe us in grand total?
216.28.
Good. 216.28. And last but not least, what's my note here? Sold to customer A. Okay. And then you could say 10% discount. Oh, sorry. 10%, 15. Is it 15 or 10? Let's see. We're going to be giving customer A 10 days to pay. If not, the whole thing is due in 30. Okay. Okay. Good. Right? This one's also a sale, so we don't need to update our inventory worksheet. So then let's see what happened on May 8th. So here, we made another purchase of inventory. Okay, so we purchased on May 8th 250 mugs at $2.75 each, with the freight costing $50.
You have purchase expense.
Purchase expense?
Mm-hmm. You have a freight. And he didn't pay, so account payable, no?
Mm-hmm. Good. So I'm going to copy the information from above here. Okay. So, except the information down here is that we end up purchasing 250 mugs at $2.75 each. Okay. So let's see, May 8th, you purchased 250 mugs at $2.75 each with a freight of $50. So we know the freight is $50. Okay. How much is the purchase price?
$687.5.
Okay, so that's my total sales, or my total purchase. So it's $2.75 each times 250. Okay. How much is my grand total that I owe?
737.50.
$737.50. Good. All right. So let's plug these numbers into my inventory worksheet, right? Since we made a purchase of inventory. We bought $250 items at $2.75 each, with the freight costing $50. So what's my total purchase price?
$687.5.
Good. Plus $50 freight. So then what does that bring my total cost per item to be?
$2.95.
$2.95. Okay, well, let's see. Let's extend it to see it. If that's actually supposed to be more than that. Okay, good. So far it's even. Now, this is what we should also do here is create our goods available account. So we know how much items we actually have available, right? Because when we bought our first batch of inventory, right, we originally purchased a total of 500, but we ended up returning 15 of them, right? And same thing here, right? We were quoted at a total cost of $14.25, but we end up getting a refund for $39.75. So therefore, we have a noodle total and a new total cost, right? We started with $28.50. Oh, sorry. We started with $14.25 minus the $39.75 to get $13.85.25. Okay, and of course we need to resolve for our cost per item here because this time we have a less quantity and a less total cost. Okay. So there we go. We are plugged our inventory on our inventory on hand, or our inventory worksheet. So let's see what else is next. Okay. That very same day, you end up returning 50 of those mugs because they were the wrong color. Okay, they were black mugs instead of brown mugs. Okay, and Copico offers 15% discount, and you accept it. Okay, so what do we call this?
Purchase, return, and allowance.
Good. Purchase returns and allowances, which here is going to be account number 556. Okay. So once again, we're going to have a purchase returns and allowances. And how did we pay for it?
No, we have a term.
Yes, so therefore we are going to decrease our liabilities because we didn't pay for it. So the only way that we could get a refund is by decreasing our accounts payable. Oh, I think it's May 8th. Okay. Now, in this case, right? Let's go back to my inventory worksheet real quick. Okay, in my scenario. I ended up returning, okay, 50 mugs because they were the wrong color. However, the Copico decides to convince us, hey, you could still keep those mugs and resell them, right? because it's just another different color. And they're going to give us a 15% discount to apologize for their mistake for shipping the wrong color out to us. And we accept it. So therefore, how are we going to calculate this now?
Do we do the 50 mugs at $275 and take 15% off of that?
Excellent. That is correct. So I'm going to save some calculation work on my journal and just do it right in my inventory worksheet. In this case, did I actually return any of the coffee mugs?
No.
No. Okay. However, it's going to cost me $2.75 per mug. Now, in this case, I am going to go ahead and take 275 times 50 times the what, how much was it? 15%? So my discount was 15%. So in this case, what's my total amount that I should be getting an allowance for? Hello, anybody? So we took the 50 mugs, we multiply it by the per unit price, which is $2.75 each, and we're going to take a 15% discount. So how much is going to be my allowance?
$20.62.
No, that's definitely not right. So how much is it? Not 110. That might be what 50 times this is. So what's 15% of $137? What was that?
It's a 50%. It is.
Fif-
It is a 50% of 130 is $20. Huh?
Yep, 2063.
60. It's okay. Find 62. It's okay.
It should be 62 and a half. Okay. So in this case, we're going to go ahead and refund the 62 or 63. So here we are, $20.63. Okay. So let's finish up the description here, right? Returned 50 black mugs at $2.75 each for a 15% discount allowance. Okay. So let's go back and update our inventory worksheet because now, we have a new cost here because in this case, right, my second batch of inventory, right, since I didn't make any changes, right, I had 250, but 50 of those right, were black mugs, but we end up keeping them. Okay, so therefore I should still have 250. However, I ended up not getting a bill for the full $737.50, right? I ended up getting $20.63 less. So therefore, how much should be my total cost?
$2.87 and 86,748. 87. Okay.
Okay, $2.86748. Good. Okay. Then on May 10, you end up selling another 30 mugs for $9.99 each for cash. So I did another cash sales.
Do you have a cash?
Uh-huh.
Sales
Okay.
and sales tax?
Good.
Yeah.
Right. This was May 10, I think. Let's see. Let's go back into the... Yep, May 10. You sold 30 mugs. Okay, so in this case... Okay. So, what is my total?
299.7.
Okay, $299.70. How much tax am I going to be charging?
24.72.
$24.72 and a half, so round up. So what's my total cash I'm going to receive?
$324.43.
Good. $324.43. Good. Okay. All right. Then on the 12th of May, right, we're going to sell 60 mugs at $9.99 each to customer B on an account. Terms is 10%, 10 net 30. So this is May 12th, and we sold 60 mugs on an account to customer B.
Account receivable.
Okay, so same situation here, accounts receivable.
sales tax.
Okay, May 12th, accounts receivable, sales, and sales tax, right? If I sold 60 mugs at $9.99, how much is my total sales?
$5.99.40.
$5.99.40. How much tax am I going to be charging?
$49.45.
$49.45. So in grand total, how much does customer B actually owe me?
$648.85.
Good, good. So let's go ahead and make my note here that I sold 60 mugs to customer B. Okay. We gave him terms. If he pays within 10 days, he will get a 10% discount. Hold on, sorry. My keyboard is not acting. %, 10, net 30. Okay. All right. Good. So once again, this is a sale, so it has nothing to do with my inventory worksheet. Okay. Good. So now we're on our general journal page 2. Okay. So then, because we sold 60 mugs to customer B on an account, okay, 3 days later, customer B comes back and he returns 30 mugs for a full refund, okay? So that means we got to refund customer B for a full refund on 30 of those mugs.
Sales return. No? Yes?
Okay. So we have a sales returns. Good. Sales returns is 406.
406, yeah. And let's see. Sales tax.
Yes, because we charge sales tax in the beginning, so therefore we need to undo it.
And account receivable.
And accounts receivable, right? We got to reduce the amount that customer B owes us. So in this case, accounts receivable. Okay. So sales tax was 230, accounts receivable is 201. So therefore, if we sold if we sold 60 mugs at $9.99 each and customer B is trying to return 30 of them, how much is my total sales returns and allowances?
$299.7.
299.7. Good. And then how much tax am I going to be refunding customer B for? Because we charge them for the full amount.
$24.73.
Good. So in grand total, how much am I going to reduce the account?
$324.43.
Good. Good. And then I'm going to make a note here. Customer B returns 30 mugs for full refund. Okay. Good. Once again, all right. Now here's the question. We sold 60 mugs to customer B. And because they're making a return of those 30 mugs, what do we do with those cups? Because we actually got them back. What do we do with those cups?
You don't do anything, no? The vendor is supposed to do, no? Oh, no, actually, you as a customer, right? So, I don't know. Sales? Discount? I don't know.
Not a sales discount. So in this case, you're on the right track where we never kept track of sales in the first place. So the fact that they're going to give us a refund, or I'm sorry, the fact that we gave them a refund and they returned the mugs back to us, we never recorded sales in the first place. So in this case, we don't do anything with it because we never kept track of how many mugs that we sold, right? If we did, we would have updated our inventory saying that we sold this many things. But at the end of the day, when we go down and take a physical count, that's when we'll know how many cups we actually still have available. So in this case, we do not need to do anything for this transaction right here. Okay. Good. Okay. So then on the same day, it says that here you sold 25 mugs each at $9.99 for cash.
So we have a cash.
We got cash, good.
Mm-hmm. Then sales, and then sales tax.
Yes. So cash, sales, and sales tax. Good. And this is for the same day that customer B returned his mugs. So 5/15. Okay. So in this case, right, I sold 25 mugs at $9.99. What do I do with this? How much is my sale? Excuse me.
$249.75.
$249.75. How much tax am I going to be collecting?
$20.60.
$20.60. So therefore, how much cash am I going to be receiving for the sales?
$270.35.
$270.35. Good. All right. And once again, we have in-store sales. We sold 25 mugs. Okay, in-store sales. Good. Let's keep on going. So then May 18, all right, customer A pays in full with cash. Okay. Customer A pays in full with cash.
It was the 20 mark, 9.99.
Okay, well, let's go ahead and take a look at where that transaction was.
I think
Okay.
it's the 6th, no? May 6th.
May 6th, you sold 20 mugs at $9.99 each to customer A on an account. Okay. Now here, we gave customer A some terms. Okay. Let's see. Did customer A meet the discount? This is
Nope.
May 6 plus 10 days is May 16. In this case, they just missed the discount period by 2 days. So that means they have to pay in full with cash. So let's go ahead and take a look at the amount that they owe us on May 6. May 6, right here. They have an accounts receivable for a total of $216.28. So because customer A is paying in full and with cash, how are we going to record that they've made a payment?
First is cash, no?
First is cash, right? We received cash. Okay.
And account receivable.
Yes, because they paid us on what they owed. So accounts receivable, which is 103. Now, how much was it that they owed us?
260.
216.28. So therefore, we should be receiving 216 and 18 cents. Okay? So therefore, right, we're going to make a note that customer A paid in full. Okay? Good. Now, because this transaction was that they paid in full, does that affect our inventory worksheet at all?
No.
No. Okay, once again, this doesn't even affect your sales either because in this context, they simply paid. That's it. They simply just paid. Okay. All right. So then that very same day, we end up selling 50 more mugs, okay, at $9.99 for cash.
Cash.
Right, we're going to recognize cash in
Sales
sales. Good.
and sales taxes.
Good. So this is 515. Oh, sorry, 518. Okay. Now in this case, we sold 50 mugs. Okay. So in this case, what's my total sales here?
$499.50.
$499.50. Okay. How much tax am I going to be charging?
$41.21.
Good. So in grand total, how much cash should I be receiving?
$540.71.
540.71. Good. Correct. Okay. Awesome. Okay. Let me take a look at the scenario real quick. So what I'm going to do is I'm going to stop here real quick and let's take a break. So right now it is 2:38. I'm going to round that to 2:40. So go ahead and take your 20-minute break and be back no later than 3 o'clock. And we'll finish and wrap this up after the break.